Good morning, ladies and gentlemen. Happy Thursday to you all. The question on everyone's mind today is how low can we go? If you were living under a rock yesterday, this stock market basically tumbled and kept tumbling, and it has not given remorse to any of the bulls. With that, let's get into the video real quick. So, quick timestamp below. If you want to go over NVIDIA earnings, it'll be linked down in the description for the timestamps. Check that out. And if you guys wouldn't mind, hit the like button. It really helps the YouTube algorithm. And then if you guys like the content that we produce, hit the subscribe button. So with that, let's get into the video. So the S&P 500 today closed 0.14% down. However, in after hours trading, it is up about $1 due to Nvidia's earnings. Nvidia had a very good earnings, so it naturally pushed the whole market up because it is a big weighting, especially in tech. However, if we look at the chart, and let's ignore earnings for a second, you have not only two gaps that you have not filled in the last 24 to 48 hours. You have two candle closes now below the 50 weekly EMA. We are now heading towards our 50 daily moving average on the S&P, along with the NASDAQ. It has closed 2 days below the 50 weekly moving average, and we are probably heading towards that 200-day moving average retest on the NASDAQ. We did have a doji candle today, which was a lot of indecision, but we're going to discuss why I think this giving a false sense of security to the bulls. And if you guys remember our last week in deep dive, we were calling for a big short squeeze up because there was a lot of indecision here in this candle right here. But after seeing this massive red candle, I closed my bullish positions out for a loss and flipped bearish. Today I actually swapped to team bear and actually opened up a Apple, Amazon, Microsoft, NASDAQ, S&P call credit spreads, and we have the S&P and NASDAQ one's expiring Friday, and then a couple week or 2 week out on several of the other companies, depending where the charts were. But I see more downside for the stock market ahead. So that's why I'm saying this is a candle of indecision, but also maybe giving a false sense to the bulls that we are going to head back higher. And we're going to talk about that in the news catalyst, along with reviewing the FOMC minutes that came out today. So simply, if we ignore all the catalysts, we're below the 50-day moving average for both the NASDAQ and the S&P. Looking at the NASDAQ, the last time we broke down below our 50 weekly moving average, bad things happened. I'm not saying we're going to necessarily get this type of waterfall, but it's not a show of strength by the bulls. They had opportunity to buy this price already, and they're not really stepping in. If we go to the 5-minute on the NASDAQ real quick, you really don't see a lot of buying pressure until the end of the day. They had to buy this back up to not close lower. Same story with S&P. They just barely had to save that close so we wouldn't close so close to the 50-day moving average. That's not, you don't want to close anywhere near this line, especially if you're not buying it up with ferocity. And we really didn't sell off necessarily on high volume. If you look at the 1 hour, we are seeing a dominant trend in volume. We see bigger red candles than green candles. We have accumulation of red volume, more and more. You only had one green hourly candle on the S&P, which was the close candle, and you didn't even manage to bullish engulf it. If we look at the 4 hour to give us a little more longer time frame, intraday time frame, on the S&P, you have a bearish engulfing candle. On the NASDAQ, bearish engulfing candle. So just taking a look at futures right now, they are trading green, with the NASDAQ up 0.6, the S&P up 0.3, but we haven't had Asia open, we haven't had anything open just now. So this all, by the time you guys are viewing this video, could have gone completely in a different direction. We also closed outside of value on the NASDAQ, so it does incentivize us to come back lower. And where are our next resistance and support? So what we're going to do is we're going to go to the NASDAQ first, and we're going to delete all the lines we had before, and we're going to redraw our support and resistances. So to me, the first resistance that we have is this swing point here that we bounced off of at 297.25. That is a very, very strong resistance in my opinion, because it was where we bounced off of, broke down below. We tried to reclaim it, filling this gap right here on the 4 hour, but then didn't claim that area and sent us lower. Next, where could we find support? To me, it's pretty simple. We found support around this region, 292.30, because it is where we bounced off, nearing our 200 daily moving average on the NASDAQ and pushed up for that massive push. I believe this was around Jerome Powell's time speaking in January or the FOMC meeting. We definitely had a key level being tested today. If we break the 292.30 level, my next point of support I'll be looking at is the 200 daily moving average. If we break that, there is going to be a straight waterfall on the NASDAQ, in my opinion, to this level of 284. There's significantly more downside to breaking this level, and there's a couple news catalysts coming up, mainly PCE, and we have GDP on deck today, Thursday, the 23rd. So if GDP comes out and the market takes it in a bad way, which is good news, bad news, bad news, good, bad, bad, good, we really don't know until we see the reaction from the market. But if a large consensus of the market hasn't really bought this dip up like you've had before, all around here, you were buying the dip. We haven't really seen that. So we could, just looking at this, possibly be even flagging out. You have your flagpole here, make this bigger for you guys. And then we have our sideways action here. We could be flagging out in this region here. And we could see a push up tomorrow to probably even the 296 level on NASDAQ. And then with SPY, if we draw the flagpole here, we could be getting that characteristic flagpole pushing even to 401, kind of staying in this region. But I wouldn't necessarily be looking for a crazy push tomorrow. I think you do close green tomorrow just because you've had so much red, but I could be totally wrong. I'm hoping for a bullish push down. I hope we break this 396 level on SPY, but what I'm seeing is there's a possible flag forming on tech. I really wouldn't validate the S&P flag just because the flagpole isn't a straight line down. But if we look at this, if we break this flagpole, hypothetically, and we come down, that puts us back down to in this previous level of 282, which is an area we consolidated previously, again, right before the November CPI report around here. So we really could be coming back down to test this 283 level, which would be another roughly 3.5%, 4% down from where we're currently at. But we're going to let the levels tell us where we're at now. Now, what are some of the warning signs that I'm seeing in the market to give me more of a bearish skew than a bullish skew? So let's go through that real quick. The S&P is now, and NASDAQ are below both the moving averages. We're failing to reclaim that moving average, even though in post push on Nvidia, we still haven't reclaimed the moving average on the SPY. Secondly, if we look at the volatility index, VIX, is basically gapped up on the daily. We didn't have a bearish engulfing candle on the VIX. For all those that don't know what the VIX is, it is the volatility index. And we had this previous wedge pattern before here, which once we broke it, we're price targeting of roughly $27, exploring this upper range up here above the 200 and daily and 250 weekly on VIX. Once you get above that point, you're going to start waterfalling, because the last time we were here, it was our October low. So we're dangerously heading into this region where VIX is going to be pushing up higher. And VIX was kind of down today, even though the NASDAQ and S&P were showing strength. It really didn't sell off too much, 2.5% on VIX. People kind of just still seeing that hopium out there. I'd be paying attention to VIX to see if we start breaking this 2180 level on VIX. I would be a little more cautious that we may be heading higher on the market and down on VIX. They're inversely correlated. If we look at the Dixie is breaking out of this region, trying to head higher towards this test of the 50 weekly. I don't think we break through on the first one, but we are heading higher. We kind of pushed up, flagged out, pushed up, sagged a little bit, now pushing higher. Once we clear this point of 104.667 on the dollar, that's definitely going to be bullish. And also, why did we reject there? Well, it's a previous point of consolidation in this region here, so definitely something to be on the lookout for there. Let's take a look at yields. The 1 year pushing up higher on the daily. We have the 2 year slight wick down, but we're pushing higher. So where could we be going from here on the chart? 5 year, we're pushing up again. We had a bearish day, and now we're starting to have a bullish day, pushing up higher. All the yields and TLT We go back to TLT all the time. We made a new low yesterday, but then today we had almost a gravestone doji type of candle or inverted hammer, but since it was a push up, it really doesn't give you a bullish sign. It gives you more of a bearish sign. And our price target for TLT, if we look at this ascending wedge that we broke from here to there, we're looking at $85 for TLT making new lows. If bonds make a new low, that's going to put downwards pressure on the stock market. And for me, it's a pretty simple trade of looking where we close tomorrow. Do we close back above the 50? Do we find resistance there? Do we find sellers there? And seeing how we had to have this massive push into close, all you're doing is giving the bears, okay, thank you for the free gift, bulls, we're going to send it right back down. And there's a trend line here that we cannot break. And that trend line is the upwards trend line that we've had from the October low, the consolidation back in December into January. You break this trend line, that 200 ain't gonna hold. There is no way that 200 holds, and we're probably coming back to this 370 region, or even this region here at 379. And one of the theories that we can contemplate is you almost have left shoulder, head, we come down here, bounce, form the right shoulder, send us lower, probably into the next FOMC meeting, or we completely just go down lower and don't even stop at this region. But if you look at all the levels we've built up here, you have areas that all the bulls are kicking and screaming that bought here in these dark pool prints. 405 was a key region that you had a lot of buyers, and now you're below that. So once you come back above it, you're gonna have people that just want to get out. So really, it's gonna be an incentive for them to get out. How do they get out? Become sellers, increasing selling pressure, and we could be heading lower. So it really depends on where we go. Do we break this 394? Now for the key levels for the S&P, it is going to be resistance probably around this 400 region here. For the 50 weekly, support is going to be your 396.81 for your simple moving average 50. Now, do I believe we're going to come back and explore this 405? I doubt it, just because this 50 now becomes a major resistance point, which if you look back in history of how strong this resistance point was, 1, 2, on the third touch we broke through, but you had sold off below it, came back above it for a moment, and then got slammed back down. So to me, it really gives more of a easiness for if we open up higher, come reject, come back, crash down. That's definitely, you have GDP tomorrow and PC on Friday. So it's definitely something to be on the lookout for. And where we could be going is really going to depend on these next news events that we're going to talk about. Guys, we're going to go over the news events now. The GDP early revision for Q4 is going to be coming in. They're expecting 2.9. So if we print a lower GDP number, that could be bearish for market. We have continuous jobless claims that are basically estimated at 1.7 million, and the previous number is 1.696 million. Seeing how an unemployment came in last month and the downtrend that we had, I don't believe this number is going to come hit. I think it's going to become better than expected, which is bearish for the market. And we have the initial jobless claims again, 200,000. I'm a broken record with this. They guess 200,000. It misses every time. It's probably going to be 185. It's my guess on it. And then we have a Fed member speaking at 10 o'clock. But all this pre-market movement here could definitely send us lower or could send us higher. We have Fairched Bostic speaking at 10:50. However, that person is not a voting member, so I don't see this actually moving the market significantly. But it could reiterate some of the highlights from the FOMC minutes that we're going to go over next. And then Friday, Big Daddy PCE, the preferred metric for inflation by the Fed. We actually don't have a forecasted year-over-year number or a month-over-month number, but the core numbers just tell us it's a bad number. You have an increase of 0.1 on the month over month. I don't see this 4.4 coming in or this 4.3. I'm expecting 4.5. That's just my own personal thoughts. PCE of 5, probably 5.2, and then a 0.3 on the month over month for January, because all the other numbers have just been coming in absolutely atrocious. We have new home sales at 10 o'clock. I don't see that moving necessarily market too much, but you have a bunch of Fed members speaking, Jefferson and Mester. Jefferson is a voting member this year, so I'm definitely going to be paying attention to what that person has to say and what they're kind of indicating, and that could move the market. Mester is not a voting member this year, so therefore I'm not really going to be paying attention to what she says, because ultimately, if you don't have a vote, your opinion really don't matter. We saw those with Jeff Bullards that sent the market, but then afterwards it got completely reversed, and then net speculative positions. Hopefully we get a publication this damn week, but it's been delayed every time. So that's what we got here. Now we're going to go over some of the highlights from the FOMC minute. So if you guys don't know this channel on Twitter, it's Breaking News Market at Financial Juice. Great channel to take a look at. So we're going to dive into the highlights from the FOMC meeting. I use this channel all the time for stuff like this. But we also had Fed Williams, which is who Jerome Powell listens to. So we need to be receptive to what he said, and let's take a look. So Fed Williams, we don't want inflation expectations to drop. He's basically telling you inflation's not going away. That's hawkish to me. Next, we're going to go Fed Williams. Monetary policy must restore demand and supply equilibrium. Okay, they're not telling you we're there yet. They're telling what they have to be doing. Increasing rates. You have demand outweighs supply, and the labor market is very strong. Again, going back to this labor market, we keep beating this over and over and over and over again about the labor market. It's too strong, and they're going to hyper focus on the labor market, even though people think the Fed is not going to focus on it. They have multiple mandates, and they see the labor market being a threat to their mandate for constant price stability. So Fed Williams, although good prices have fallen in recent months, there are indicators that this may not happen as swiftly as predicted. Hello, PPI came in like a murderous number, so he's just ringing the bell. Fed Williams, we're currently committed to returning to 2% in the coming years. What does that kind of tell you guys? He's expecting inflation to stick around. Price stability is a fundamental need, blah, blah, blah. Fed Williams, 2% inflation is the core target. So he's basically saying core has to get below 2%, and you're at 4%. So they're not going to stop. And then if we scroll down to the Fed minutes, so like we just mentioned, Fed minutes, participants stated that continued tightening job market would contribute upward pressure to inflation. Hello, job market, what they've been talking about. Fed minutes, participants said that inflation in the last 3 months has eased, but they need to see more progress. Ooh, what progress? We're going in the opposite direction now, guys. Fed minutes, participants stated that the risk to the economy outlook were skewed to the downside. They're basically telling you recession and soft landing. That's how I read that. You have the Fed minutes. Several participants say they protracted debt limit process in the United States could pose significant risk to financial systems and the economy. Not really know what that's all about. Participants express high levels of uncertainty about the economics, job markets, and inflation outlook. So they're telling you they don't know what inflation's going to be, meaning you don't take your foot off the tiger's neck thinking the tiger's still freaking alive. You take your foot off when you know it's thoroughly dead. So that's how they are viewing inflation. You have mostly all participants at the Fed's January 31st February meeting agree that raising interest rate by 25 basis points was appropriate. No crap, you had good data, so that's an old news. Several participants advocated raising interest rate by 50 basis points. I think there's going to be a lot more now, especially with the data we saw. Some participants predicted an increase in the likelihood of a recession in 2023. Basically, if you look at the FOMC summary of economic projections that came out in December, you actually see that they're saying GDP is going to shrink and possibly go negative. So they're openly telling you stuff that is already in their summary of economic projections. That's not new to anyone. All participants support additional balance sheet reductions under the current plan, basically blowing the bond market up, so yields are going to go higher. And the participants agreed that restrictive monetary policy was required until the Fed has confident that the inflation would fall to 2%. They also agreed that the process would likely take some time. No rate cuts, no rate cuts, no rate cuts. So again, guys, link in the description to this channel. It's an awesome channel, but they're basically telling you that we're not getting lower rates this year, and the market still has this stupid rate cut plan in its head. And it's going to end poorly because they're still pricing in some cuts later down in the coming months and going lower afterwards. What this is telling us is you're going to head higher. And if we look at the graph of the 2-year, my favorite graph, the Fed is going to chase this. So the 2-year is already pricing in 2 rate hikes of 25 basis points. And this yield is going to stay above until the Fed basically says, yeah, we're going to pause. And so once they raise rates, this yield's going to jump. So they got a good 50 basis points in them before they're equal to this. And this is going to continue higher. So really, you're breaking out on the 2-year. You're probably heading higher. And until this line here gets below this line here of the federal funds rate, we're heading higher on rates. We're having more, and means more negative for the stock market. So again, let's go over the key levels of the S&P and NASDAQ for today, and then the rest of the week for the Friday close. So basically 400 on the S&P, 396 for the downside, or where we would find support. NASDAQ support level is 292.30, the resistance level 297.25, and next resistance on NASDAQ would be 297.98, which is your 50 weekly moving average, but close enough with that last point. Probably crosses to there. And really, for continuation in any of the markets, you have to make a weekly higher high. So that would require NASDAQ between now and tomorrow pushing all the way to 2.5% roughly. I don't think that's going to happen, guys. That would be tremendous. You would have to have PC come in very, 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 very good for you, and then S&P 2.25%. So this is showing a trend reversal. You're heading probably more towards the downside, and that's why I'm taking bearish positions, because I'm pretty convinced that even if we get a push up and the options fall in the money, I'm just going to roll them, because the mass trend, if we look at what Luxalgo is telling us on the weekly for the S&P, our MACD is crossing. This should be the biggest warning sign for everyone on the weekly time frame. I preach this, guys. Look at the bigger time frames to understand where we're going. On the weekly, which you take a full week made of 5 daily candles to tell us where we're going. So I definitely see more downside, see lower lows, and we could be coming up to maybe that 400 level as a resistance point, and that's our previous low from 3 weeks ago. So it's really going to be a strong resistance level now that we've broken below it. So MACD's crossed bearish. We have RSI crossing bearish. Oscillation is starting to turn over. And then on the daily, your MACD's converge bearish, separated far above. Oscillation hasn't really bottomed, and it's pretty much the same story with the NASDAQ. Your RSI is heading lower. You're diverged significantly from this below the 50 line. MACD's bearish, going even lower, diverge from one another. So definitely something to be on the lookout for from our downside. And if we look at what the last thing holding up the stock market is, in my opinion, is Apple. Apple started filling this gap in today, but really it didn't complete the gap fill all the way. You still got about another, I would say, 2.5% to go, which would cripple the market because Apple is such a big weighting in all these indexes, and it's the last soldier to fall. That's kind of been the tradition with Apple. It is the last soldier to fall in all of them, and once Apple goes, the rest go with it. If we look at the daily for Microsoft, crap. If we look at Amazon, crap. If we look at Google, bearish. MACD is separate from one another. You could start curling to one another, but I don't suspect that to happen. And if we look at where the SMAs are showing for Apple, you're below the 50. You bounced off the 200 daily, but again, you're in this kangaroo now. Microsoft, you're below the 200, heading to the 50. Amazon, you're heading towards that 50 as your last support and below all of them. So this is not painting a bullish picture, guys. Google below the 50, below everything. So below the 200, probably gonna come down, break this $88 and complete this flag, I would be assuming right here. So Google's price target would probably be, if I were to assume, that this is a fully fledged bear flag with a pretty decent flag, guys. Price target of $60 on Google, which would pretty much confirm retaking out those lows. We're heading back towards even the COVID lows here. So there's definitely more downside possible in the stock market, and we're definitely heading lower. I don't think that we're going to be finding any bounces soon, especially with the momentum that we have now, but I could be wrong. You got to be able to admit when you're wrong. Right now, I see a trend reversal. We're in the kangaroo here, so expect volatility tomorrow of the bulls and the bears fighting. If we don't see the bulls show up tomorrow or today, you're definitely going to be I expect volatility, and because you're in this kangaroo today, along with PC coming out Friday, tomorrow, I definitely see more downside and I see a lot of volatility. So don't be faked out by the move of, oh, we're green, I have to get in. Sit on your hand until PC, and then you'll know the move. Once the market picks direction, you can pretty much play the long-term direction and look to pick it up on the downfall at certain points for swing trades or short it, one or the other. With that, guys, we're going to dive into Nvidia for earnings and give you the bull and the bear case for the company. So as we have here on earnings whisper linked down below, the reported revenue was 88 cents. The earnings whisper 85 cents. Beat on EPS. Reported revenue was 6.05 billion, with estimated revenue of 6.01 billion. So that's good. It did issue a good forward guidance for the company. However, you had a slowing in revenue growth year over year. So let's take a look at the stock's reaction. Massive push up. Nvidia was in a pretty bearish slide recently, so it's only natural when they beat earnings that it pushes up. However, this is where I put on my caution hat, and Nvidia is trading about right here at this price zone of 227.21 for post earnings. We do have on the daily a MACD divergence along with an RSI divergence. So if we go to the 4 hour to see this a little bit better, and we do the extended trading hours, you're basically coming up right to this point. So do I see good things happening for Nvidia if it doesn't manage to push past this 230 level? This is my expectation, because you ran up not expecting a stellar earnings necessarily. You met earnings. You had this parabolic run. If you double top, meaning you have to fail to clear above 230, I could definitely see that we hit the zone here and we start coming back down. And if we start coming back down, you have a lot of gaps that you're gonna be filling that you gap down below, and now you're coming through them. There is no price support if you come back down. So basically Nvidia cannot have a retracement on open. If you start seeing Nvidia coming back down through these levels, I would definitely be going short. I'd be getting out if you were in it. And definitely where I could see a continuation of resistance would probably be this area of this previous uptrend. So I would be saying about the 232 level. However, we do have a significant gap on the daily of 230, and then not a lot of price action once we get past the 230 to 250 level. The weekly, which is always what I indicate, we are in a sell zone where MACD is probably going to pinch together in the coming week. With this earnings report, I do think you could see a continuation higher, possibly even filling out this price zone of 230 a bit more and continuing higher. If you get to 250 on the video, that's where I'd be basically looking to get out. This MACD definitely will be crossing bearish then at that point, and RSI going higher. I think we would find support on the video if we were to sell back down all the way at this 140 level. I think it'd be a pretty massive sell-off. And I know everyone's saying, well, they beat earnings and everything. This run up here was absolutely parabolic. So you broke down, you push back up. I would definitely be looking for the retest of that resistance point. MACDs are going to be cross bullish, but you're going to create that complete that divergence. I definitely be looking to see if we can push up past this point, finish out this divergence, and when it exhausts, I'd definitely be looking for shorting opportunities. To me, I don't see a lot of value in Nvidia post earnings because you just had this massive run. All you're doing is validating the massive run, and we really have to see where banks, there's going to be a lot of price upgrades probably, so just fair warning, don't get too much in the hype train, but I could see an interesting run on Nvidia. Europe probably 8 to 10% right now. I'm gonna guess it's gonna close probably 5 or 6% on the day. I wouldn't be surprised to get an inverted hammer on that move and maybe sell off afterwards if the market pulls it down. Remember, we're getting GDP numbers tomorrow and then PCE. Don't be expecting the move necessarily to hold green if those numbers are expected to come in bearish. And for me, telling you guys where you find support and where you find resistance, it's pretty cut and dry. 230 resistance, support all the way down in the 190s. If you start coming back and filling this area as the get out quick, because once this gap fill starts, it is going to not stop, and we're going to have nice big sell off, similar to how Intel pushed up and then sold right back off. So with that, guys, I thank you for watching the video. If you like this type of content, throw down what you liked about it in the comments below, any ticker requests, and then if you would not mind, hit the like button. It really helps the YouTube algorithm. Subscribe for more. We do a weekend deep dive where we're going to go over this in even more detail. We can give me and my friends perspective of what we see for the market, kind of the fundamental and technical piece of it. So with that, guys, I hope you have a wonderful Thursday. Remember, have stop losses in place, and whatever the market does, just make money.